With me now is the chief economist of RICS. His name is Simon Rubinsohn. So why the weakening confidence in the UK housing market, Simon?
Well, I think it is partly a function of what's going on in the wider economy. The news flow has been pretty grim recently, and I think that has had an impact on sentiment. It's true that there is a bit more mortgage finance around, but much of that is coming at a price. So first-time buyers scared by some of the uncertainty in the economy, possible public sector job cuts as well coming through as well, and then having to pay a bit more for mortgage money, even if it is available, and still find quite a large deposit, is a pretty big deterrent. The problem, of course, is that the alternative is the private rented sector, but as our report of last week showed, rents are moving up very sharply at the present time.
And I guess landlords are doing pretty well out of the situation too. But does this mean that prices are set to fall even further this year? Because, you know, a great deal of concern about austerity measures, but many would say they haven't really taken hold yet.
Well, I think it's fair to say also that prices haven't fallen that far just to date. Certainly we're seeing on our indicators, most surveyors reporting that price falls are in the 0 to 2% area, so pretty modest declines. And crucially, there is a major regional issue at play here. London is really a different, you say, a different market altogether. Prices are rising in the capital.
London was clearly the exception in this survey, because it's not just that, I mean, record rising prices.
Well, London prices are moving up quite sharply, and the expectations are we will see further price gains in London.
So what's driving this? Well,
I think it's a combination of the fact that the London economy is clearly driven by different factors from many other parts of the UK. The financial service industry, perhaps in better shape than many thought was likely to be the case. Overseas buyers still quite interested in the marketplace. Professional service groups also doing reasonably well. Job creation underpinning the market, I'd suggest.
So from what you're saying, that this divide between London and the rest of the country is set to
that's set to continue, absolutely.
Even further. What about interest rates? How much of a worry is that for both existing owners and buyers?
Well, I think at this stage, certainly I'm in that camp that doesn't really see rates moving up, certainly in the near term, and I don't think too sharply, even if we look into 2012. Clearly it's a risk, Martin Wheel outlining the case for a rate hike. If rates were to move up sharply, clearly that would put further pressure on the markets. I don't think it's likely against a background in which the economy is sort of still bumping along the bottom.